Singapore was the biggest Asian outbound property investor in the first half of the year, surpassing China. This even as overall Asian outbound investment declined compared to the same period last year due to slower investment activity from China. Now, that's according to a new report from CBRE Research. Elizabeth Nyo with more.
For the first half of 2018, total Asian outbound investment activity was $25 billion, down 44% from the $45 billion recorded in the same period last year. This was led by Singapore, which accounted for 36% of the region's total capital. Hong Kong and China followed after. Of the $5 billion invested in the Americas, Singaporean firms accounted for slightly more than half of the total. Within Europe, the Middle East and Africa, about a third of the investments came from Singapore. And within Asia, Singapore invested in slightly over a quarter of the total.
Trend of Singapore capital going out will continue. Singapore has become a pivot for especially Asia. For development. A lot of the capital is also, one is going to mature markets on income yielding assets like office or even logistics. In the developing countries or in Asia, a lot of the money is also going to development projects, which again give higher returns, and a lot of the development projects are long term. So it could be residential, it could be office, it could be retail, it could be logistics.
Singapore's position is gaining ground because of the capital controls in China. And the capital controls means money flowing out of China into Hong Kong or Singapore is being crimped, but we don't have that in Singapore, and that is causing Singapore to rise up in the ranks. The latest cooling measures on the private residential front is perhaps forcing developers to think of expanding their overseas wing even more.
Meanwhile, the slowdown by China in outbound real estate investment was attributed to Chinese investors buying less and selling more. CBRE said this is not expected to affect China in the long term because it is a big market. As for Singapore looking ahead, outbound investment is not expected to slow, especially in the short to medium term. However, there are several factors that could change that.
If the market starts giving higher returns within Singapore, which is not expected in the short term, because then, like anywhere else, the money comes back into the domestic market. Second is a lot of global factors that which is happening right now. There is talk about oil prices going up, currency, dollar becoming stronger, trade disputes happening. So there are many other global factors which can impact the outbound investments. But as of now, I don't think that will be the case